One of the strongest emotions we're capable of feeling in life is fear. Whether it be in a dangerous situation or even in a dangerous trade, the mindset is the same. Holy crap, I need to get out of here. But in moments of panic, sometimes we forget to think critically to find that best outcome. And the same can be said when we're trading. What many people don't realize is that the best traders are the ones who are able to control their emotions, focus on the facts, and find opportunities where others find despair. Here's the harsh reality. 90% of people in the market right now have absolutely no clue what they're doing. And honestly, that's okay. It's a risky game and people are just willing to risk a lot right now. In the grand picture though, every time you win a trade, somebody else is losing. So that means that either you win or somebody else does. So you can choose to either play it properly, think critically, and set yourself up for success, or you can set somebody else up for success. You can watch them take your money. So if 90% of traders are trading emotionally and they're not making any money, why would you do the same thing? Why would you do the same thing? If you want to be different, you have to behave differently. So today we're going to give a couple examples where you could have made a strong investment position just based off overreactions and fearful trading, because at the end of the day, the lesson to learn is this. If you want to be a good investor, you have to separate yourself from emotion and logic. Divide those selves, throw away the emotion, and focus exactly on what the facts are. Because the market doesn't care what you think. The market doesn't care what you feel. The market will do as the market wants to. And it's up to you to adapt, and it's up to you to react. So let's take a look at a couple plays that you could have made that can help you understand overreactions, when to hop in, what a good setup is, and how you can start making money off of that. Let's go ahead and get started. So what we're taking a look at right now is the chart for Peloton. So for those of you who don't know, Peloton makes exercise equipment, things like treadmills, and generally their products are a little bit more luxury, they're a little bit more premium, so they come with a hefty price tag. Well, all of that considered, they've become very popular and they're almost considered the staple of exercise equipment when it comes to celebrities and such. So keeping that in mind, Peloton's a fantastic opportunity to invest in the market. Not only that, we've seen many opportunities with their stock price over the last, let's take a look at 3 years, right? Look at how much they've grown. Just from 2019 to now, they've gone from a low price of $17 to $170. That's 10 times your money. So you definitely don't want to discount it. Always look at the long-term perspective of a stock, because you never know exactly what's going to happen. So if we go back to the year, what I want to do is I want to switch to the 90-day time frame, and I'll show exactly why. Do you see how the stock has, generally traveled within this Fibonacci pattern? But the moment it stopped is when it caught our attention. See, there was a bit of an issue with some of their exercise devices where I believe a child was caught through the back of the treadmill where So Peloton had an issue with some of their devices where it was actually really easy for a child to get caught into a treadmill. Now, while that's very dangerous, nobody was hurt, which we're very thankful for, but that obviously didn't translate well when it came to their stock price. So if we take a look on May 5th, right, we saw this huge drop in Peloton's price, going from a high of the day at $98 to a low of $80.48. So that's a $10 drop on a stock that was 90 some dollars. Even if you say 100, that's a 10% drop. And Peloton is one of those stocks that we knew that long term, they're meant to be more than 90 anyways. So to us, we saw it as an overreaction, because ultimately it can be fixed. Nobody was harmed, which means there's no lawsuits, and ultimately this is a learning experience for everybody in the industry, so it's really not the worst thing, only because nobody got hurt and there was a valuable lesson to learn. Peloton long term still has really strong numbers, they still have really good sales, so from a fundamental perspective, it still makes sense to invest in the company. It being at $80, it just made a lot more sense for us. So we entered somewhere around this bottom range, and we realized that this is a huge overreaction. So we ended up loading up shares, and we said, you know what we'll do? We're just gonna wait. And that's exactly what we did. So you can see by this trend line over here that Peloton stock, from the day it fell on the 5th, continued to find its way back up. And this right here is a bit of an ascending triangle in a sense. So if you're trying to learn patterns in the charts, I'm going to do my best to point out everything I can see. Sometimes I may not notice something and you may. So if that happens, shoot us a message in the comments so that you can help some of the other members with that as well. So let me just close this so we can see the chart a little bit better. What we're seeing is that they've been on this they were on this continuous upwards trend. So we saw it bounce off here, saw it bounce off here, bounced off here. So we have 3 points where it's used this line as something stable. And then we've got another one over here. So we know that this is an accurate trend when it comes to Peloton stock price. So realistically, right, when it comes to optimizing a trade, the goal is to follow the trend with the stock until the stock stops following the trend. And I know that sounds very, very basic, but trading really is basic, right? You buy low, sell high, now you made money, right? The issue comes from understanding when. That is the $1,000,000 question when it comes to trading. So the best way to combat that, or the best way to answer that, is by setting some guidelines for yourself. If I know it's going to continue going up every time it bounces off, I don't need to worry. I just need to make sure it bounces off and continue growing. But then you reach a situation like here. You see how it fell below the trend line? So what happened here? It fell below this trend line on the 3rd of June, and it fell, and then we saw it struggle around this support resistance line at $103. Then we saw it bounce right back up, but the same line that was being used as a support is now being used as a resistance, and that's when it failed. So luckily, we had another spike, and we decided as a team that, okay, about $112, $113 is the perfect place for us to take profits. So keeping that in mind, right, when you look at the trade, you realize that you started from a price of 80 and you've gone to a price of approximately $113 in, what do we say, less than a month? Or specifically about a month, right? So in the grand scheme of things, how long did it take you to make about 34%? And you should see a screenshot on the screen right now, which is an accurate depiction of when we sold the stock, just so that it's there. This is one of our smaller positions, but there were many members who put in a lot more money. They made a lot more. Members with smaller accounts put less. And this is the benefit of long-term and investing, really. Not even trading, this is investing. Because what you're doing is you're investing in the company, not investing in the people who are manipulating the price, right? Stock prices are dictated by supply and demand, bid ask, right? That's what it comes down to. So when we're day trading, when we're doing technical analysis, charting like that, when we're doing shorter time frames, we're really banking on people's behavior. But when it comes to something like this, what are we banking on? We're banking on the company's success to guide the stock's price up long term based on investors, hedge funds, indexes, whatever the case may be. Wherever the stock is present, we know that long term, if the stock or the company behind the stock has a strong basis, it's going to continue moving upwards. That's just how it works. So in a situation like this, we believed in Peloton as a company. We saw that there was a huge overreaction. So if we'd entered at 95, sure, would have made about $10, $15 on the stock, which is pretty cool. $20, right? We would have made from 95 to, assuming 115 round up, that's about $20. That's not bad. But because there was an overreaction, we were able to add $30, right? A total of $30. We were able to add that $10 drop into our margin. And that's what it comes down to, right? When they say buy the dip, this is what they're talking about. They're not saying every time it falls, throw your money into it. Because sometimes it continues to dip, right? We saw that with Clove. We took a look around $11 and change, and it just kept dropping from 10 to 9 to 8 to 7 to the 6s. Sometimes that happens. And obviously Clove recovered, but you have to be careful by what they mean by buying the dip, because there has to be a basis behind it. When there's an overreaction, when there's fear and people overreact, that's when you attack. When everybody is zigging, you zag. And that's how you find yourself in a profitable situation. So this is just one really great example. Just watch how the market reacts. If you truly believe in something as an investor, you know the value's there, but you see that people are overreacting in some type of way. Combat that. Find a way to behave differently. Find any gaps in the charts and see if there's something that you can take advantage of. 9 times out of 10, a gap is filled. And if you don't know what that means, check out some of our other videos. We discussed that. It's all about trading differently. Because if 90% of people are failing, doing the same thing as them will probably lead you to fail as well. So you have to think critically, you have to think intelligently, and you must be patient. Because that fear, that emotion, will screw your trades up. But if you think with logic, if you think with numbers, if you think with statistics and discipline, you're going to turn out just fine. So with that, that's today's video. I just wanted to give a quick example of how you can use other people's fear to make money in the market. With that, if I've misspoken or said anything wrong, I do humbly apologize. With that, keep learning, keep loving, and keep growing, and have a wonderful night.